and welcome to this morning's webinar for the London session. Thank you for your patience. I think we're actually pretty much on time this morning, which is great. And the audio has been resolved on our headset, so David can hear me, poor thing, and I can hear him. Ray, great. But before we start, as usual, please may I draw your attention to the disclaimer that you can see on your screen. It can be a very risky business, so please don't even think of using money that you cannot afford to lose. Right, here we are. The webinar, as usual, it's myself and David. I'm the one on the left, and we will be looking at the markets, at what's happening, at what is happening, and what is much more important, what is likely to be happening in the upcoming session. And as always, we will be taking the principles of volume price analysis, which is our core and base methodology for analysing the charts. But we will also placing that methodology in the context of the fundamental news releases, related markets, and increasingly the sort of political element, the political angle, if you like, to what is going on in the markets at the moment. Now, I know many new traders, they sometimes can struggle a little bit by trying to put all of these things together. And the key to this is to simply start with the charts, which is why we really recommend that new traders, put together a methodology that really suits them and helps them to make sense of what they see on the charts. Hopefully, it will include elements of volume price analysis, but volume price analysis is a brilliant methodology because you can add to it. You can overlay different technical indicators, standard indicators, proprietary indicators, and we have proprietary indicators from our company Quantum Trading, and these are the indicators that we use in this session, and we'll showcase them as we go through the webinar. What we've also done with regard to the knowledge and expertise that traders have to sort of gather and make, and put together, is we've put them all into these books that you can see up here on your screen. There is the volume price analysis book, but there's also the book which is a three-dimensional approach to forex trading, which covers all those other elements that traders do have to get to grips with. But it does take time. And the analogy that I used, I think not last time, but the time before, is basically maybe learning to fly. David and I have both taken flying lessons. One of our neighbours is actually a BA long haul captain. Now, he flies, huge jets with, he flies around hundreds of people in his aircraft, and you've all seen a dashboard of what a modern airliner looks like, and it is truly overwhelming and truly scary. But no one starts like that. Everybody starts on a small aeroplane with a few basic instruments. And what we suggest is this is how you should start. You start with the chart, you start with volume price analysis and what it can reveal about what has happened, what is happening, but as I said, much more importantly, what is going to happen. And we're going to see a fantastic example of that actually on the pound yen. And I'll go through with that later on in the webinar. And of course, all that price action has to be seen, has to be put into the context of what is happening on the fundamental releases, and also of related markets, and as I said, increasingly the political landscape as well, particularly where the British pound is concerned. So there we are. And this is a slide from our forex trading program, where the program actually highlights this, puts this all together, so that by the end of the program, as a trader, you really are fully equipped to handle this market and really everything that it can throw at you. And this is what we mean by the interconnectedness, the relationship between these markets. Forex sits very much at the middle. We have the bonds, the equities, and the commodities. And we will refer to different aspects of this in these webinars, in all the webinars we actually do. And the reason I do this at the beginning, this little sort of spiel as it were, is because I know we have a lot of new people joining us who perhaps have never have never looked at the markets in this way. And I mentioned earlier we have indicators. These are the ones specific for the Forex market that we have developed. We've developed lots of other indicators, but we've put them under the heading of the currency dashboard. They're available as a group, as the dashboard, which are these four, or you can purchase them individually. And again, we will refer to them because they're a graphical representation of what is happening on the charts. It's a really very easy and quick way of instantly spotting when a particular currency is approaching an overbought or oversold state, a potential trade, if you like, on an individual basis, and then also for pairs as well. And that's regardless of whether you are like us, you're fairly indiscriminate in the sense that you look at the 28 pairs and you think, well, which is the best pair or pairs to trade today or for the next couple of days. And it's a great heads up of what is moving and what is likely to be either maybe reversing. But if you are focused on one or two pairs, you have a portfolio of pairs, gives you an instant heads up of what those pairs and what those currencies are doing. I'm going to shut up for a minute, and I'm actually going to pass over to David, and then we'll look at some charts.
Thanks, darling, and a very warm welcome to you. I was going to say good morning, but it's morning here. It's an absolutely glorious morning, sun shining. It's wonderful in Hampshire today. But I hope it's nice where you are. It may be middle of the night. I hope not, but a very warm welcome wherever you are in the world. It's great to have you along with us today. Just to, if this is your first time along, I know we've got quite a few regulars in the room, so welcome to you. But if this is your first time, as Anna said, we run it as a two-hander. We focus on really you on MT4 or MT5? Anna's on MT5. Anna's on the MT5 platform. So we tend to spend quite a bit of time on that, but I've also got the NinjaTrader platform running, so we flip-flop between the two. And we're happy to take questions, so if you have any questions, please just drop them in the chat box. If they're short ones, we will answer them there for you. And longer questions, we will answer on here for you as well. So happy to answer anything and everything to do with trading and related issues. I'm going to pass back to Anna, and we will get going.
I've just started with Forex Factory because this is the beginning of the month, and the first thing that traders, all traders, especially Forex traders, realise that the fundamental news releases are relentless. They just come in tidal waves, and the beginning of the month is obviously always the PMI. Now I'm going to have my little rant here, which I've already ranted about on Facebook and several posts. Is the PMI, these are the purchasing manager indices, and you can see here they're always released at the same time for the different currencies and countries at the beginning of the month. What I don't understand from Forex Factory, and because this is the economic calendar that a lot of traders use, is these releases were always in red, and since this last couple of months, David, the last couple of months or so, they've kind of been downgraded to a sort of yellow and orange. The color scheme on Forex Factory, red, orange, it's a bit like a traffic light in the sense that red is likely to have the most impact. So you see here the RBA rate statement that we had overnight, that's given a red because it's likely to have a high impact on the markets. And the PMI, until, as I said, fairly recently, were also red. Not necessarily for all the currencies, certainly something like the Italian services PMI, no, because it's Italy, whatever, Italy's economy, it might have, maybe having an impact in the Eurozone for different reasons. The ones that would be much more interesting would be the German one. But the pound one certainly was always red, and certainly services PMI, given that services play such a huge role in the British economy. I don't understand why this orange. Anyway, rant over. So please do not underestimate the impact of the PMIs, but you have to, they're not all equal. For example, the Chinese one, the Caixin services, is a very important one. And in fact, I've read on Talking Forex that it has, the reason it had an impact on the performance of the Aussie dollar. And now, going back to how things are connected in this market, when you say, well, why is the Aussie dollar affected by what's happening in China? And as we've said many times before, it's because the Australian economy is hugely dependent. 30% of its exports go to China. So anything that is happening in the Chinese economy, good or bad, is going to affect the Aussie dollar. This is what I mean by having this 3D approach to this market. And that's after, as I said, looking at the charts, what is happening on the charts. Charts what you see on the chart will always be in context of what is happening in the broader markets, and obviously against the fundamental news. So the news up for immediately is at 9:30. Obviously, we've got the British pound. So as I said, my little rant over on that, and we will go straight to the charts. The said charts. Here we are. Right, pound yen. Why did I look at the pound yen? Well, we always look at the pound yen because it's a great pair for movement volatility. When it moves, it really does move, and as I said, it can be your greatest friend or your greatest enemy. And I've actually done a little post about this on my own personal site, which some of you may have seen already. And what I wanted to highlight here, this is the daily chart. This is what I said about volume price analysis, and what it can teach you, what it can show you, what is happening on the chart. We've had this move away from the volume point of control that we can see here. It was in sort of congestion, quite a wide range here. Lots of, when something is in congestion and it's ranging, there are plenty of opportunities to swing trade it. You go long or short on the faster timeframes. But the reason I wanted to highlight this move higher is because there's been a sort of fairly relentless and a very strong move higher, which is not really captured on this chart because it's quite a small scale. And the candles I want to pay the most attention to are these three candles here, which you see are quite widespread up candles, sort of minor wicks to the top, but nothing of great significance. And look at the volume. Now, it's the volume on the daily sometimes can be, it can not misleading as it were, but it can look very samey as it were. But the point is, look at the volume bars under those three candles as the pair is moving higher. What's also interesting, if you ever go on to investing.com and you put in the pair that you're interested in, I just type in pound yen, and what it's now pulling up is it has a kind of forum for traders who kind of talk to each other, and they put their thoughts about this particular pair. Now, as the pair was going higher and higher, the kind of conversations between the traders were, well, they were looking to short, they were looking to take a short, so they were looking to short here, they were looking to short here, using all sorts of different metrics. Some of them were using trend lines, some of them were using Fibonacci, some of them were using, whatever it is they were using. But what was happening is the pound yen in its normal weight was just marching higher. At some point, things go higher, strongly, they are going to roll over. Weakness is going to come in, but how can you spot that? Well, from a price action perspective, you had these three candles higher. Then this is Thursday. You had this sort of very smallish doji candle. Then you had Friday, which is not a reversal candle. It's certainly a candle of indecision. It means the market doesn't know whether it wants to go higher or not. Friday's candle was this a shooting star. It's not a massive shooting star, but there's enough in there, there's a wick to the top. So both these candles together especially with the shooting star coming after the doji, well, if that wasn't going to be a reversal, well, certainly something is going to happen. Don't forget, this is Friday. But the key here is, yes, you have these two candles. So just based on price action alone, trying to short something here while you've got it in a strong uptrend is, well, you've got to wait for some kind of signal to tell you that this market is going to pause and maybe look to roll over. But the key here is actually in the volume, and it's the volume profile, the volume histogram. Actually, that's much more descriptive. Having expanded that, you can see the sort of the more nuanced volume, as it were. You have a similar volume under these candles that you have in these up candles. So as a student of VPA, that should tell you immediately these are what we call an anomaly. There's something not right. We don't, we're not, it doesn't give us an instant signal saying, right, this is going to roll over and die, as it were. But it's enough to tell us that possibly we are now reaching a point where this move higher, based on the volume that we can see here, is running out of steam. It's coming to a point of exhaustion. And what we have is a ton of volume going in, but nothing is happening. The thing is running, the wheels, as David often says, it's going uphill and the wheels are spinning and it can't go any further. And in fact, that reversal correction pullback actually happened yesterday, as we can see here on the down candle. And so this is a perfect example, as I said, of just volume price analysis, but you have to look at it also in the context of what is happening in the broader market. Because the yen is in the pair, we know that it has a correlation to market sentiment. We've had this kind of really positive bullish market up until last Friday, really. And, everyone's getting terribly nervous. If you look at the indices, the candles are getting narrower and narrower. Yes, they're all reaching all-time highs, but it's what we call the wall of worry, as it were. Everyone thinking, oh, I don't think it's going to carry on any higher. Everybody's waiting for the outcome of the China-US trade talks. Just the whole market mood, as it were. And that is what we saw reflected in this move yesterday. Now, the question is, what do you do about it? Well, all those traders who were waiting to trade short, they, had they waited until those two signals, you certainly would have been able to take advantage of that in yesterday's trading. And how that's reflected in the CSI here, as we can see, this is the pound, this is the Japanese yen, and this is what I said about having a graphical representation of what we see on the charts. These are the individual currencies. Now, the pound has actually rolled over slightly, and it simply means that there has been selling of the pound, probably against the US dollar that we can see here. The US dollar's been on a bit of a tear. Now, the yen is falling, but it hasn't actually quite turned up yet. So for that move, if you like, for that pullback to be validated, we do actually now need to see the yen turn up as well. So the heads up was on the chart, based on the price action and the volume. The CSI certainly, picked it up as well. Then this is the heat map that we see here, and we can see the pound pairs. We've seen the strong buying of the pound against the various against its various counter currencies, and we can see here that the strongest one at the moment is actually against the Canadian dollar, and these are the two, this against the Swiss franc and the yen. And in fact, on back end of the week, the yen was number one. Yesterday, it actually got down to number 6, but it's having a bit of a recovery this morning. And again, looking at it on the, this is what I've done with the two indicators, which you can do. You can actually put you overlay one on top of the other. So you have the individual currencies, and then you've got the matrix. This is the 20 minutes. So you can see how the pound is actually performing. This is on the faster time frame. So the indicators that we've developed, they are to give you the heads up. They are also to highlight potential trades. And also, together, you use them in conjunction with what you see on the chart, and it just makes life an awful lot easier. Now, this is the yen index because we want to see market sentiment, and the move higher in the pound is actually because the yen index is falling. It means market sentiment is perhaps a little bit more positive than it was yesterday. Moving to the faster time frames, I'm sorry I'm going on about this a little bit because I really do want to highlight the opportunities that you can have both on the slower time frame. So on the slower time frame here, we can see this is the initial reversal. Yes, it's having a pullback today. It may go sideways. It may carry on lower. We'll have to see what happens as the session develops. But on the faster time frame, what are we actually seeing? Well, there have been opportunities to go to the long side. As always, This is the 3-minute chart. This is the London Open. So we had volatility on the opening, back into within the spread of the candle. And as always, what you have to do when you have volatility on the faster time, well, all the time frames, but the faster time frames, if you want to then join this move higher, let me just have a look on the CSI. Sorry, this takes me a little time because I have to dock and undock everything. Let's have the 5-minute CSI. We're having here. Oh, I've taken the pound off. No wonder I couldn't find it. There we are. That's the pound. That's the pound moving higher on the 5-minute chart. Let's just move that out of the way. Dock it. Sorry, this is a feature of MT5, which means you can move your charts over to another screen. So into the spread of the candle, all the longs would have been taken out, and now if that is going to move higher, the entry for that is actually once it's cleared either the top of the volatility candle or the bottom. In this case, it is the top of the candle. And where this is going to, you say, well, that's awfully interesting on one time frame. What is the price objective of this particular price move? And here you're going to have to look at the slower time frame. So if you've got 3, let's have a look at 6 minutes. So nothing's nothing. We have to look for levels. Let's look at 10. Actually, let's look further. Let's have a look at 30 here. Well, on the 30-minute, you're actually, the reason that's also gone through reasonably quickly is because the volume profile on the VPOC here, you can see we've got what's called a low volume node. Where you have a low volume node on the chart, you know the price is going to go through reasonably fast, as it were. It's when it approaches these thicker bands here of volume, then you are likely to find it slowing down. And the R4, if you like, 147.88, well, that's a reasonable objective on this particular move. And we simply have to look at the CSI, what we're seeing here. This is on the 5-minute. Well, it's reaching over the overbought. It's not going to get there in one step. It's not going to get there in one go. So you'll find it might roll over again before it carries on. The key here is to look at the yen. If the yen carries on falling strongly, then there is no reason why this particular move, this particular pullback against yesterday's correction, doesn't have some legs to it. And again, on the faster time frame, this is the Renko. Now, what I've done with the Renko this time, usually I have it on a fixed value, on quite a small pip value, either 2 or 3. But this time I've actually left it to the ATR. And what's interesting with the ATR is this is the volatility candle. This equates that we saw on the 3-minute chart. But in fact, the price move just carried on, and which is really, really interesting, and kind of smoothed out that volatility. And again here, we have some levels that is going to 147.63. What have we got? 147.86, which is actually the R4 that I said on the 30-minute chart. If this is going to move higher, and a lot of it will depend on whether the yen carries on falling. We are coming up to 9:30 as well with the PMI, so that might put a spike in it. That might put a dent in this particular move. But this is the kind of information that you kind of put together on the slower time frame, on the slower charts, on the faster charts, and it gives you this insight into what is happening on the chart. It's logical. You're not driven by emotion. If you're in a trade, fine. It will keep you in. Well, it will highlight a potential trade. Then it will keep you in, and it will also, more importantly, help you, choose a point at which you wish to exit. And let me just see what the numbers are. Yeah, it's actually moving at 3.9. So every one of those bricks on that pound yen only completes after 3.9 pips have been completed. Now this might change. This might change during the day. And what's interesting, because it's based on ATR, if it suddenly loses momentum or it's just not moving, that pip value will rise, and it will also tell you that it's not moving very fast. It will move, but it's not in a strong, fast move. And it kind of says, okay, I know it's going to take its time. And again, it just takes that emotional edge out of what you are seeing on the chart. Sorry, I've gone on a bit long, but that's what I wanted to point out. I'll pass over to David and see if he's got anything to add to that. And I think we're going to probably, and I'll keep an eye on this, and I'll keep an eye on the on this particular pair.
Thanks, darling. Sorry, I was struggling to find my chat box for some particular reason. Anyway, I found that. I'm just going to switch screens. Bear with us in a moment. I'm just going to change over onto NinjaTrader. Should be coming up now. Just check with Anna that she can see my screen. Good, fine, thank you. Sorry, I just wanted to check because I'm the other side of the desk and I can't actually see it. Let's just move that out of the way. I've actually moved over to the euro-yen pair purely because we've got a lot of PMI data coming out in Europe. We've had positive for, I would say, minor Spanish, Italian, and French. Germany's coming in 55.3, 55.1. And we've got some more here as well for Swiss and so on and so forth, goes around Europe. So it's all pretty positive. Well, it's positive-ish, given that Germany was technically in recession, but avoided it narrowly. Italy is more or less in recession, depending on which data set you believe. So I've just switched over to the euro, and that's the reason we're seeing this spike in the euro this morning. On the charts and just over onto the various timeframes for the CSI, I've got a couple set up. This is on 5 minute. This is what we're seeing. It's very strong buying in the euro, and really spoiled for choice. I've got it against the yen, this magenta line, which is falling quite strongly. So we're seeing pretty strong selling of the yen at the moment for the time being on this very fast time frame. And of course, you'd also have that reflected in, if you've got them. I've got Globex running, so it gives me a straight heads up. But if you haven't, you can look at the indices, head over to somewhere like investing.com, you'll find the indices, but you'll also find them on MT5, which is another, some of them are kind of appearing on MT4, but definitely on MT5. So if you have the MT5 platform, you'll have access to pretty much live data for all sentiment across the various markets, whether that's UK, Europe, Far East, China, Australia, Canada, whatever it is. You'll be able to find it pretty easily on the MT5 platform. But you can see the strong buying in the euro. It's carrying on. This orange line, it's rising. It hasn't yet got up to the overbought region yet, but it's still rising strongly and nicely, and the yen is falling equally strongly. So in terms of looking at opportunity, you've certainly got the euro yen, which would be one. You could look at euro Aussie, euro dollar. They would be moving. Euro New Zealand, they would be moving as well. The ones that would be moving less strongly would be, for example, euro pound, because the euro is rising strongly, the pound is up here, so they're kind of traveling in the same direction. Now, that's not to say that on euro pound you wouldn't find some trend in there. You probably would, purely driven through the strength of the euro. Let's just head up onto the 15 minute and see what that's reflected there. And of course, it's got a long way to travel on 15. Still got a long way to go before it reaches up into overbought, if indeed it does get that far. But you've got a nice crossover in terms of the yen diving strongly, and that's why you're seeing the strength of trend, and that's why you would also see it reflected, for example, in the euro dollar. If you look at euro dollar right now, I don't need to look at a chart on the faster and slightly slower time frames to know that there will be a trend developing. The dollar's been consolidating for some time, but is now starting to sell off. And given that the euro buying is pretty strong, there will be a trend there as well. So it's really a question. The euro, the CSI is always the place to start. It's the heads up place to start. It identifies everything. What I've also done on these time frames, as you can see on the left here, I've actually applied the currency matrix, which gives us a head up to euro sentiment, and it also gives us a heads up to across the complex as to whether that buying or selling of euro is universal. And in addition to that, where it is most strongly reflected. And you can see here at the top, we've got euro yen, euro CAD, euro New Zealand, and euro dollar at the top four. If we head over to the 15 minute, just to isolate out, there we are. I've got the euro down here. Let's just click the euro off there. There we are. In terms of the 15, it's not so well developed, but then you wouldn't expect it to be, because it's all a question of time, because what's occurring is everything happens from a faster time frame through to a slower time frame. So what's going on the 5 minute if that trend continues to develop as it is at the moment over here on 15, then what you expect to see is the euro yen climbing, and if the sentiment is universal and remains universal across the complex, then you will see it reflected in all of these pairs rising equally. At the moment, what's interesting down at the bottom here on the euro pound, you've got selling of the euro here, but you've got strong buying, and that's purely because the strength of this buying in the pound that's been very strong throughout certainly early part of the morning at any rate, is helping to keep the euro suppressed in that particular pair. So again, it gives you a visual as to which pairs are performing, what the sentiment is, and how that sentiment changes literally second by second, minute by minute across your chosen time frame. So just head back to the workspace again. There we go. So we're now starting to see a little bit of a pause come in, and always the way, because when you're looking across the time horizons, what you're looking for is you're looking for information, the pieces of the jigsaw puzzle, which will help you decide whether this trend is running out of steam or whether it's actually got further to travel. And once you start to look at these, let's move that out of the way. Once you start to look at the 5 minute, for example, this is the 3 minute, this is the 5 minute, this is the 10, and the slower time frames down here. We've got 30, we've got the daily over here, and in the middle I've got the Renko running. But if you pull up the 5 minute, for example, what's the 5 minute telling you? Well, as you get to these levels, you've got decent volume going in here, and you've got big wicks to the upper bodies. So, you know, this is not looking terribly strong. This is looking like a market that's, you know, it's had a rally. We've broken away from the volatility indicator. We saw some strong volume coming in, but then we had some selling coming into that. And this was reinforced further with further selling on this candle, because again, the market's trying to rally, falls back, closes not well off the highs and relatively close to the open of that particular candle, deep wick to the upper body. You know, this is not a market that's looking terribly strong. And we get a reversal there. If we go over onto the 10 minute, what's the 10 minute telling us? Probably not quite so much. Okay, we've had the strong rally, we've got decent volume under that, so we know it's a decent move, but again, we've got this wick to the upper body. Without the wick to the upper body, if we'd seen a nice close back up here somewhere with decent volumes, high volumes such as this, then clearly there isn't any selling in there. In this case, there is, because we've got a wick to the upper body, and we're seeing that reflected in the reversal here as well. So we're not breaking away at the moment. And all of that really is encapsulated in the 30 minute, which is this one. Just pull that up full size. Because what we're seeing on the 30 minute is very much the demonstration that the market is not really going to go very far, because we've got volatility on 30, and now what we're seeing is a retracement back inside the spread of that candle. In addition to that, we're trading around the volume point of control. From a longer term perspective, if we were trading this longer term, you know, this looks pretty good, because we've got low volume up here in terms of the volume point of control on the histogram, and we've got very light price resistance in terms of what is likely to cause a barrier to any move higher for this particular pair. We've got a little bit of price resistance here, a little bit of price resistance here, but nothing like the strength that is sat right up at the top here, or indeed some of these levels here, a little bit here, which might act as a platform of support, and some more here. So if we were looking at this as a long opportunity, from a trading perspective, you know, this is quite a nice region of price. It's very light in terms of volume. We've got low volume nodes here, so we've got very little to cause the market to pause there as it goes higher, or indeed in terms of straight price. This is on the accumulation distribution, but it works in the same way as on the MT5, MT4 platforms with the support and resistance indicator there, which is based on price. So you're looking at support and resistance through two prisms. The first is price, which is these levels. The second is through the prism of volume, which is what the volume point of control is all about. So if I just drop that back to the smaller size, there we go. And let's just go back to, and the other one that, sorry about that. Let's just pull that up there. Let's just go over to the indices, see what's happening on the indices. This is the dollar, the yen, and the euro. Just pop these up. This is on 15. So this is the yen index on 15. It's a little bit spiky. It's not, it's not got great trend development. Let's just look at the, this is the dollar index. Again, it's starting to roll over, but it's not moving in a particularly strong way at the moment. But certainly, there's some dollar weakness there for the time being. And this is what we're seeing on the euro. Again, this is on 15. We've seen that spike up, but the market is not looking terribly strong. It's had the reaction because fundamentally what is overlaying Europe are all the other political elements. And I tried to explain this last week in that when you see fundamental data being released, you have to put it into the context of a broader picture. It has to be seen in that way. It's like the dollar, for example, with NFP, or a big fundamental like we had, it was advanced GDP. Now, whilst the number may be very positive, and it may certainly cause a knee-jerk reaction in the market, what it's battling against is the bigger picture of what is going on in terms of the Fed and their pronouncements and their forecasts and what they are likely to be saying and what they have said. And no matter how important a piece of fundamental news may be, and indeed advanced GDP is one of the big ones, whilst it may have a reaction intraday, the follow-through from that is likely to be less muted because the overweighing pressure on that particular currency, and therefore the currency pairs, is much more dictated by what is going on in the Fed, because the impact of the Fed and the decision-making ultimately, longer term, will have a much greater effect than any short-term piece of fundamental news. Now, the caveat to that is that if that piece of fundamental news comes into a positive situation, in other words, let's suppose, for example, we've got advanced GDP in the US, and at the same time we are seeing positive statements coming out of the Fed on the prospect of further rate rises, let's say, then in that scenario, the two are working together, and therefore the effect of the GDP number is going to be much more pronounced and indeed longer lasting. So you've always got to consider any piece of fundamental news in the context of the broad picture for that particular economy, for the central bank, where we are in the rate cycle, etc., 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 because it will always have an impact. Now, the data that's come out this morning for the euro, yes, it's positive. Yes, it's given the euro a bit of a lift, but that's really all it's done. It doesn't look as though it's going to carry through because it's battling against all the other effects which are in play, not least of all Brexit, and secondly, of course, the economic landscape that is now prevalent throughout much of Europe, which is pretty weak economies. So you have to see it in the context. Now, if you're prepared to take, scalping opportunities on that basis, on news releases, that's fine. But in terms of a longer-term position, you've got to bear it in mind in that way and against the broad picture. I hope that all made sense. I should go back and see where we are. Trading in a range, coming off the highs. Let's just go over and have a look at another one I was looking at earlier on, which was the pound Swiss. Primarily because we'd seen some very strong buying of the pound and very strong selling of the Swiss franc, and I was looking at that as a potential reversal opportunity because my eye is always drawn to the extremes. That's where I always look for first. We go over to the CSI. This is on 15. So my eye will always naturally look down here and will always go up here because I'm a greedy so-and-so and I like to get in early. I'm prepared to pay the price for that, and the price for that is wider stop losses. But in return for that, I get rewarded with getting into a trend early. It also requires patience because the pound may stay up here. We've got news coming up in 20 minutes, so it's probably not the greatest example, but generally this could sit up here for a little while. I mean, you've seen the dollar up here. It was flip-flopping around all over the place, snaking along. Now it's starting to sell off a little bit. There's nothing in the rule book that says that this pound is going to just roll over nicely and give us a lovely trade all the way to the downside. And equally for the Swiss franc, or indeed the Canadian dollar, we're going to see the opposite come all the way up to the top, and we'll have a nice, lovely ride for a very long trend. in comparative terms on a 15-minute time horizon. But at some point it will, because this market is one of mean reversion. What that means is that these currencies never stay still for long. They are constantly moving from overbought to oversold and back again. And all you have to do is wait and be patient. Look across the time frames. If we go down to the 5, what's happening on 5? We are starting to see that develop. We are starting to see the selling in the pound develop. Now, if your time frame is 5 to 15, that's fine, because that's what you're looking for. You're looking for the fastest time frame to begin the development of the trend. It's starting to happen here. You're seeing the selling in the pound, and you're starting to see the buying in the Swiss franc as the counter currency, so you can be assured there will be a trend developing on 5. May not have started very much on 15, but provided this continues, and again, there's no guarantee it will, but it just guides you to A, where to start, and B, what is happening in the faster time frames if you're trading on a slightly slower time frame. You can also see up here the reason we've seen the euro. It's got up into this region, never actually got into the overbought. These levels are just guides. They're just to give a sense of where a currency is reaching a potential position. They're not getting get out signals. It's just to give you a guidance, really. And you can see here the euro is starting to roll over. So on 5, we're seeing that effect. Just see if we're seeing it on 15. No, not at the moment. So in terms of that pause point, that's the reason it's pausing. But just going back to the 5 again, we're seeing the pound come off. We're seeing the Swiss franc start to rally. The Canadian dollar is a little bit more sluggish, but certainly at some point it will come off the floor and it will start to rally. But as I say, there's no guarantee it'll get to the top or bottom, but it will start to develop the trend. And that's what you're looking for the whole time. So my eye is always drawn to the top and bottom of the currency strength indicator as the starting point, because I want to find reversals. If you're not looking for reversals, if you're looking to jump on a trend that's already underway, then you're looking at crossovers. You're looking, for example, on the 15-minute time horizon. The euro is still rising, but we know on the 5 that it's starting to pause a little bit. So, that will be reflected on 15 at some point. But this is a crossover. And you've got potentially another one coming up here against the dollar. You've got the euro rising and the dollar falling. If you go over on to 5, there are lots of opportunities where there are crossovers developing. And it's a question of whether you want to jump onto that trend. You can also see over here on the 5-minute, that euro buying was very strong. The matrix was aligned. We had them all aligned up at the top. But that is now starting to come off. And as that starts to come off, you'll see it reflected on the 5-minute currency matrix. The 15-minute currency matrix, it never really got to a stage where we saw that strength develop through the matrix. We may have had opportunities in here, we certainly did, but now it's starting to pause and flatten off. Just go back to the charts again. See all that reflected on the chart. Oops, there we go. There we are. This is on the pound Swiss. And that's what we're seeing right now. There we go. So the market's come off. We go again. It's down to the slower time frames. Let's see what they're telling us. As Anna said, you look at these are anomalies. Something's, was it Shakespeare? Something's rotten in the state of Denmark. Might be wrong on that. Apologies if I am. But you can see here the volume. The volume is identical. This was a nice widespread up candle. Yes, it had a little bit of a wick to the upper body. Fine, that's okay. We've got volatility, so maybe we were expecting a pause point anyway. In addition to that, we've got the volume point of control, plus we've got a ton of volume in here. So there's 26 reasons why you might expect that market to pause at that point. Plus you've got some price resistance as well in this blue dashed line. But in terms of the volume profiles, you've got identical volume. One candle does that and another one does that. Well, what's that telling you? Well, it's telling you that it's weak because you've got a deep wick to the upper body, very small body in itself, identical volume. All things being equal, this candle should have closed up here somewhere at the high of that session, if it's going to reflect what went on with this candle. Because you are comparing like with like. This is 8 o'clock. This is London session. This is when we got underway in terms of London. So we can compare these volume candles, the volume bars here, and also the price action as well, because we are comparing like with like. We are in the London session. This is Europe. This is 6 o'clock. This is 7 o'clock in here. This is Europe getting underway. This is Far Eastern Asia overnight. So we can't compare these with these, but we certainly can compare them amongst themselves as a group. So in terms of what we're seeing right now, is it any great surprise to see we're seeing a pause point? Answer, no, it isn't. 26 reasons why we're seeing it right now. In addition to that, if we go right back up onto the 3-minute, the trend monitor has been blue throughout. This was, here we go, this was 7 o'clock. Europe gets underway. Positive price action for Europe up to here. Then we get the reversal. Now the trend monitor is kicking in. We've gone from bright blue into the darker blue, through to the darker red, and now we're into bright red. And we're trading around the volume point of control. Volume's building. And again, you know, there's lots of reasons why this market is pausing, both from the perspective, obviously, the fact that we've got news ahead. So we expect the market to pause. We expect to see, this is the pound. We expect to see volumes attenuate a little bit. And we know for a fact there will be volatility coming in 10 minutes time or so. So in terms of trading this particular pair, personally, I wouldn't be trading the pound right now as an intraday scalper because the news is too close. It's 10 minutes away. It's just too close to call, and you just have to sit and wait and be patient and wait for the result. And then once the news has come out, to also then, as I said earlier on, it's an important piece of fundamental news, but it's not the greatest. But the importance is, excuse the pun, but the importance of the news is really in the context of being framed against what is going on in the UK in terms of Brexit, which has a much, much greater significance, rightly or wrongly, good or bad. Yes, it creates volatility. Someone says something, you know, we've seen it so many times now. It's just, you know, it gets a bit tedious after a while. But that's the big picture. That is the big picture right now, whether we like it or not, and we have to trade the pound accordingly. So, you know, if the data comes in good, fine, it might kick the pound up a little bit, but it's not going to cause a long-term reaction for the pound, because ultimately what will dictate the pound's fortune, certainly over the next few weeks, is Brexit. I'm going to pass back to Anna for a moment, okay, if I may.
Yeah, do you want to move the screens as well?
Yeah, and we'll move screens back as well.
We've just come back to the pound yen here, and it's really, really interesting because, as I said, the Renko is set at, I'll just double check the setting is the same. Yep, 3.9 pips. I'll just move that down. And this is the actual chart for it. We can see here, really reflecting what we see. It's kind of a slowdown. In fact, when David was speaking, I was looking at it. I was worried it wasn't moving at all, actually, but that's simply because as I said, we're waiting for that item of fundamental news. In terms of how you would be looking to use this indicator is in terms of potential entry and certainly potential exit, is we look at it using a combination of the trend dot, which is very, very close to the market, but also with the trend monitor, and really look for those to change not at the same time, but certainly allow a certain number of dots to go through. And here it's very much a case of trial and error. When the market is chopping like this, you may find this sort of flip-flopping. That's quite unusual, actually, go from bright blue to bright red, and you can see there. But you do use it in conjunction with the time charts as well. But what you're looking for is this smoothness. So you're looking for, after a period, let's go right back here, you had this fall lower, then you had this potential to take the trade to the upside. You always get a period of congestion, then it went lower again. And this is a nice example, actually, because it did coincide. You had the red dots, then the red monitor, then you had this pullback, but it didn't go to blue, it just went to the indeterminate color. And some people like to take, so that's it, you know, it could go to blue, and all things being equal, there, I'm coming out, I'm happy with that move. But in fact, it then carried on lower for, you know, really a very nice number of pips. And then you get this, you carry on with maybe moving. Let's go here. Sorry, go back. We had a little bit of sideways chop, but the monitor still held, and it really wasn't until you had a kind of pullback against this move lower. It did. This is an example of where maybe you can use these indeterminate colors to say, yeah, do you know what, that's a great move, I'm coming out. And to move higher, yeah, that would be perfectly valid, but it didn't go very high. But then you have to look at it in the context of the session time. That looks like it's 10:50. It's coming to the end of the New York. Where am I? 5th, 10:51 this morning. Beg your pardon. That's 8:51, isn't it? I always get a bit confused with the timestamp on MT5. But you look at it in conjunction with what is happening on the time charts, but also what is happening on the other indicators as well. But this is the move that we're looking at the moment, reflected as we see here on the 3-minute. This is all this, it smooths out all this noise that you can see here. You had the volatility, then you had the pullback, then you had the move higher. We haven't had volatility, but we've had a correction back to, in fact, the volume point of control at 147.46. This is a standard 200 MA, the fractal adaptive one that I use on these particular charts. And what you're also seeing is you're seeing this sideways action between these two key levels off the VPOC, because, as I said, we're waiting for the PMI at the moment. What the VPOC, what the Renko does, it just reflects that, but it takes away all the as I said, the noise that we can see on the time chart. The levels are very clearly defined. This is the level. We've had a pivot up here, that we had this move lower. And as David said, if the pound is one of the currencies that you like to trade, either against the yen or perhaps one of the other counter currencies, certainly with PMI coming up, you would, and you're not in anything, then certainly strongly suggest you wait until the PMI data comes through. Or you do, as David says, is you basically don't have the pound, you just sort of avoid it for the time being, given if you find it's too volatile, certainly against the yen and even against the dollar. I know David says to avoid it completely, but some of the cross pairs might elicit something against the commodity currencies. You'd really have to look at it, because, as I said, it really depends on your approach to your trading. One final thing I wanted to say about the fundamental data, and I refer to the kind of the color system that they use on Forex Factory: red for high impact, tier 1, high impact, medium impact, etc., etc. There is a flaw in that a classification, and it is this. That's awfully interesting, and it's useful to know, but you also have to take into account that at certain times in the economic and business cycle, certain releases are not so important. So even though they may be flagged up as tier 1, because of the business cycle or economic cycle, the markets and the central banks aren't really paying that much attention to them. The best example I can give you of that is until recently, or relatively recently, interest rates. The interest rate decisions from the Fed and the BOE, they would always be shown as red, as tier 1. But when we were in the depths of QE and bond buying and the central banks were flooding the markets with liquidity, everyone knew that the interest rates would not be rising for some considerable time. So you do also have to place them in the context of the economic cycle and the business cycle, and really just highlights again that this market is much more complex, and it's not just a simple up-down bet that you see on a chart, and trying to reduce it to that, I think leads a lot of traders astray, and I think is partly responsible for the attrition rate in this market, that so many traders, so many people are attracted to the market, and why not? Because it's it's low cost of entry. It runs 24 hours a day. You have access to all sorts of instruments that you can trade, that you can you can express your opinion on. And yeah, for sure, there are traders in there who will just see it as a simple up-down bet. But the prices that you see moving on your charts, there is a world of complexity behind it. It's not complicated; it's just complex, and you really have to understand, that complexity and pull it apart, as it were. And then what you see on the chart is going to make a lot more sense. With VPA at the base of your technical analysis. Is there anything else you'd like to say, David, on that?
No,
I'll turn myself off then. Do you want to?
Just waiting on the news, really. Just another 3 minutes to go. Just see how that comes in. Just bear with us a moment.
Sorry, what I meant to say also, when we were looking at the CSI, and we could see, if you remember at this point here, when the pound looked as though it was going to be sold off, but it didn't sell off against the yen. And this is this asymmetric force that you can also see, which is also reflected on the CSI. And this is it's a great example of that, where we saw the pound was rising, then we could see it was rolling over, but the yen was carrying on lower. So it wasn't, it wasn't an equal. The drivers weren't equal. The move in the pound had stalled because the yen was still being. There was still selling of the yen. Now, what was it being sold against at that point? More heavily, not against the pound. Well, I would say the Aussie dollar, David? Yeah, the Aussie dollar. So there we are. So what you want to see as well is, you don't want to see, David's going to say something, you don't want to see lines going in the same direction. You want to see divergence, but occasionally what will happen is, when you look at an overbought, oversold on one currency, as we saw here, oh great, the pound is going to roll over, setting aside the PMI. But it doesn't look as though, and the yen was carrying on, because the yen was carrying on lower, yes, that did turn over, but that turnover on the pound was reflected in another pound pair, not in the pound yen. David, do you want to say something against that? Which is why we have the other indicators, i.e. the matrix and the array. But I know David wants to say something about that. Shall I come back over to you?
No, that's fine. Very quickly, just ahead of the news, and as Anna says, one of the currency strength indicator is a wonderful indicator for giving you all this information. Not only does it give you the information of which pairs to focus on, whether you're looking for reversals, trend underway, but it also tells you which pairs not to consider, because when they're traveling in the same direction, like the New Zealand dollar and the Aussie dollar are the white line and the blue line, for example, there's no trend, because that's congestion, because the two are traveling in the same direction. If you've got two trains, the analogy I always use is two trains on two parallel tracks. If you imagine them pulling out of the station, the differential speed between those two trains may be minor. There might be a little bit, but essentially they're traveling in the same direction. You only get trend and differential speed, if you will, when you've got two things traveling in opposite directions. If you've got two trains traveling in opposite directions, you've got a huge differential speed between those. So the closing speed on those is enormous. And to put that into the currency strength scenario, that's when you see very strong trend developing. So it's a fantastic indicator. It's the starting point. It will also help you to stay in, because if it's good enough to get you in, then it's good enough to keep you in. Because if you're seeing strength in a particular currency continuing, if you've moved into a position, that's great. Maybe you're seeing a reversal in it. Maybe it's time to get out. Maybe it's got to the extreme. That's telling you on a 5-minute time frame, maybe you're on 15, but on 5, it's getting to a point where it may be time to exit. Also, it will give you a heads up as to when a market is going to move into a congestion period, so it doesn't surprise you. It doesn't cause you angst. That's what this business is all about, using the indicators to give you all the information. The currency strength, the currency matrix gives you information about the complex. The currency array, which we haven't really looked at in any great detail, but the currency array gives you trend, strength, and momentum, and also gives you those signals in terms of when a currency pair is potentially reaching an overbought or oversold state rather than a currency itself. And finally, the matrix, which looks at a whole raft of information over slower timeframes and also on the ranking ladder in terms of weighting. Just going to pass back to Anna because I think the news has probably been released now.
Yes, and we had the usual, as I said, there we are. I'll just put the 3-minute chart up. Yeah, that's the initial reaction that we've seen here, the spike higher. Now we're moving a bit better than expected. Oh, good. Then we'll see. Then we have the reaction, as I said, the spike higher, the knee-jerk reaction, and anyone who's long has probably been taken out, and then the move back into the spread of the candle. What's interesting on the Renko, as I said, we went into, this is the move high. This is the sort of reflecting the congestion that we've seen on the 3-minute chart. It really hasn't. It's kind of held, but it's very clear what it's got to now overcome if this is going to carry on higher, which is 140, is now 147.63. Whether that knee jerk is going to move, it's going to be carried on through. Let's just move on to the 6-minute for a second. Let's have a look. Yeah, we've got volatility on the 6. We've got volatility. No volatility candle on the 10th, on the 10-minute chart. Let's go back to the 3. But the indicator fires in, as I said, in real time, and the high and the low are the levels that have to be taken out and breached if you're either going to get a reversal from out of the volatility or a continuation higher that we have seen. I mean, it's been fairly, if you take that overall, if you look at that, that is it's a horrible trend, but it is a sort of trend. It's a trend with volatility, David, isn't it? Trend, what we call a trend with volatility, that is in the program. The program deals with all sorts of different types of trend and also their associated risk factors. But the one indicator or the one chart type that if you are going to be on the faster time frame, which is absolutely invaluable, is looking at the Renko, because, as I said, the noise is taken out of any move, and we'll see what happens. Right, I think that's it. And if you've got to say anything else, David? Okay, I was going to pass to David.
Very quickly, I've just got the pound Swiss. I won't change screens, but I've got the pound Swiss running, and just really to confirm that generally speaking, what happens in one currency pair will be reflected across the others. The pound Swiss has got volatility on 3, 5, 10, and also down to 30. And we're now seeing it congest within that particular price range. So it's pretty much the same. And again, when you're trading on a particular currency pair, if you've got the matrix up, if you have enough monitors, it's always a good idea to have the associated pairs up for that particular complex, because they will give you heads up in terms of what is going on in the related pairs. And also you'll see all the various VPA lessons reflected in different pairs as well, and you've got all that myriad of information which will help you in your decision making on the pair that you are trading at that particular point. I'm going to pass back to Anna.
And just keeping an eye on the volume profile that we see here. This is the volume that's obviously under that candle, which is above average, which you normally get under volatility candles. This has got to need some serious volume to move higher. Looking at the previous 2 candles on the down candles, you can see the volume is much lower. That sort of, if I know we had the news coming, but if we didn't have the news, then whether this move was going to carry on lower just based on the volume underneath the spread of those 2 candles, that's an anomaly as well. There are anomalies. Once you know what you're looking for, you will find anomalies in all the charts, and they are repeated all the time. So, as I said, once you get to grips with the principles of volume price analysis and how the volume interacts with the price action, whether it's confirming, whether it's anomalous, as I said, it really does help to take all the emotion out of trading. And you simply trade because you trade as an intellectual exercise, and you think, that's really interesting. Your brain, the prefrontal cortex is in charge. It's not the amygdala, which is amygdala, which is in charge, which is the bit of the brain, the limbic part of the brain, which is there to protect us, which triggers fight, flight, or freeze. And freeze is something that a lot of traders suffer from because, as I said, it overwhelms the prefrontal cortex. But if you understand what you're looking at and the context in which it is happening, you really want, you trade while you're chilled. I'm not saying trading in the zone, as it were, but being in the zone is being chilled and, not being overwhelmed by emotion. Right, enough of me and psychology for the time being. Just very, very quickly, you can discover more about the indicators at quantumtrading.com. These are the ones for MT45 and the Ninja Trader ones, and you can go scroll down to the bottom and just, if you click on any of them here, we can see here dynamic there's the volatility one. I've just chosen this one at random, so you just click on there, and what we've done is you will find videos on the indicators, support pages, just everything you need to know about the indicators as well. Just very, very quickly, we talk about the dashboard, and as I said, you can buy the indicators individually. We do actually suggest that traders start with the individual indicators, and if the one indicator we suggest is actually the currency strength indicator, because it just tells you so much, it gives you so much information. But if you do want the dashboard, the individual cost would come to 770, but the bundle price is 497. There are bundles on all our indicators, 1, 2s, 3s, and we also have a complete package for all the indicators. As I said, the dashboard, they'll tell you overbought, oversold, strength, weakness, global sentiment, and risk. As I said, this is the quantumtrading.com where you'll find all the details. And as I said, you can buy one, a bundle, a dashboard, or a complete package. 24/7 support, all upgrades are free. If you invest in the complete package, you receive all future indicators for free. And we are working on some new indicators for quantum trading. There's a pound index, and I'm looking at something on order flow as well. And it's all covered by a 7-day money-back guarantee. With regard to education, the education program at quantumtradingeducation.com, these are the modules. Psychology is, we put that first because, in our opinion, you can have the best technical analysis education. You can understand everything about relational analysis and fundamental analysis. But boy, oh boy, if your head's not in the right place, it's not going to do you any good at all. But understanding, as I said, the emotions that are triggered in the trading environment is really the first battle, and having a methodology such as volume price analysis will also help as well. And my site is where you can catch up on all the blog posts and details on the books. Anything else you want to say to that, David? Right, we are back on Thursday at sort of a quarter to 1, 12:45. We're back at 12:45, where we look at the US Open, and we use Ninja Trader for that session, and then we're back later on in the day where we will look at the indices, which are really fascinating at the moment. So thanks an awful lot for coming along today. If you've got any questions on anything we've said, the indicators, you can drop me a line, anna@annacooling.com or david@quantumtrading.com. Have a great trading day. It is going to be quite a spiky week this week, so you have been warned. Great trading opportunities, but be aware. The markets have been very complacent lately. The VIX is at a very lowish level, not quite at single figures, but it's down at the 13s and even down at the 12s and 13s. That means complacency. Well, that doesn't last forever. So we'll see what happens. So Thursday should be a couple of interesting sessions. If you're not joining us for Thursday, we'll see you next time. Take care.